The second video of 3 starts with ETSI, folks. This is 1.7. And also stopped people from chasing it last week. Glad I did. The target 1 has been met from this red W perfectly. Target 2 is 68. Not necessary, but on a daily chart, it is doable. And you can see it here. Let me show you how the path might be on this one. If they pop, there's going to be a lot of resistance up here inside this zone. Okay, so they would need to drop and come back and beat that. And a lot of resistance in this zone too. I don't know what that is up here. So the risk is when you hit that much resistance, look at it. That's a huge resistance. You're likely gonna do this. You're at risk, not likely, of doing this, and then whoop, leg 1, try to stave it, leg 2. This is doable. It's a lot, I know, but it's doable. So just be open to it and manage your risk according to that comment. What is this? Oh, that's a giant box. Okay. All right. So if you did that debit call spread, you made money. I see that. I don't know when I put that box there. But all these pop expectations happened, and then we fell off a cliff, and then it rallied like you wouldn't believe. This is like a 2021. I cannot believe we did it twice, in 2021 and last year. So picture this in your mind and plan your quote trading accordingly. You're investing. I wouldn't get long until it's in the low 60s as an investor. The company's fine. It's not that great anymore, but it's fine. Exact Sciences. I don't know much about the business, so I can't opine on the health of the company, but I think anything above 78 is super hard to retake. So I think it's easier to get to 66 than it is to 80. 81. Fair? It's easier to go to here, which is a lot of support, than it is to go to here. And if it does go to here, I would short it. Short it, I would close it. The opportunity for the upside is 77.5, 77.4. Okay, well then if it's a cancer company, then I want them to succeed and go to 1 million because a lot of people need their medicine. So hopefully they'll do well. Ford, it's not going to do well, but now it's going to do better that they've gotten off of the EV jag. I don't know how much damage has been done to the company. Technically, this is definitely not an entry point. Anybody bought it at 1260 needs a lesson in charts. Now 1260 is the trigger to get to 1380. But I think it needs to dip to 11 another time, maybe 1120 before it does that. So it's a toss-up. You have a lot of buyers below and a lot of sellers above. And I'm a fan of good old American companies, but this doesn't inspire confidence. The fact that management was dumb enough to do what they did in the last 5 years, 4 years more, maybe 3 years, from them, from the only, never mind. Them and GM are in the same boat. I'm not going to opine on the other companies. Tesla wasn't on board because it is what they're trying to get on board of, the train. It's the driver of the train. But these guys said, oh, we have a successful P&L. Let's just dump all of our efforts into something that loses us money 100%. What? That was, what? CEO fired on the spot. Fortinet. Wow, that's a choppy stock. My goodness. So I don't know what happens if they go above 62. There's no volume. So it could go to 80. I don't know. I'm not buying calls for it. There's a lot of resistance everywhere. And it got to my arrow of the head and shoulders. You see that? Okay, so let's zoom out a little bit and tell you what just happened. We had a bearish arrow down. This hat happened. This hat was here. And it happened. So I'm going to take it out. You saw me do it here live. And it represents this arrow. It played out and then some. This bounce here was perfect. Must hold because there's another downside from that if it doesn't. But let's not go there. Let's assume that this was the bottom. Just as this is a super strong support zone at 50, 64, 65, super strong resistance zone. But if you take out 61 area, you might end up here, which might help you cover the whole thing here. But that's not for me. It's a trading stock. It's not an investing stock. P&L looks fantastic. I don't know how can that P&L result in a trade like this. I forgot how it fell. Right, but I just don't know how this P&L can yield the results like this. It's just really weird. So study the business. There's something that's deeper than our opinions. Gold. See what gold does on headlines. This is the dollar headline. The dollar. If I show you UUP, you will see similar mess up like this. Okay, or the Dixie. I don't know if it's better to see it on the Dixie. There, you see it? These candles. That's what happens to gold, oil, silver, anything that's priced in dollars. That's what happens. And so now they gave you what the extremes are for the next couple of weeks. What do I mean? Well, on a shock, they went to here, and on a shock, they went to here. Just draw a box. There's your support and resistance for the next couple of weeks. I think gold will get to 2008 or 2010 before it gets to 2090. So it's easier to get to this area than it is to that area. That's my guess. I wouldn't short it based on that. Actually, I would short it. I think I sent out a GLD short based on based on a daily chart. So let's go out to the daily chart and see what I saw. Based on this chart, look how it met my target, my upside target, and then some. That's too much. Go back and retest the neckline. That's all I'm saying. This rising wedge needs to resolve itself somehow, and it's just a little dip in order to get into better support zone. That's it. So that's what I'm counting on. So I would not buy calls, if that's what you're asking. GE, finally a few red ticks, but it did hold out really well. I don't know how it's going to behave when Boeing opens on Monday. They tell me Boeing has a bad headline of some piece of the plane flying off of it, and it's been grounded in some areas of the world. I don't know how widespread that decision is. That's pretty freaking serious, that a piece of the plane flies off. I don't know how much GE has exposure to that. Both stocks were incredibly strong. I'm short Boeing, and I will close my short on this dip on Monday if it happens. GE, technically, if it loses 123.5, it might end up at 120.5, and you have a lot of sellers above, but that hasn't stopped them. So they are right here. Let's try and copy and paste. So they had a dip, and they ended up here, right? So that was what happened last time. They had a dip, and let's see if they can do that. All right. So I think they should get to 121. Personally, I think they should do this. At least to a better base support, short-term support. Okay. GE Healthcare. So this is a spin-off of the regular GE. The P&L looks decent. Just study the business. I don't know enough about it. And P&L being so young, I don't have an opinion. Technically, I know there are a lot of sellers into 84 and 85. This looks like a pretty sharp saying, no, that's too far. So it looks like it's easier to get to 71 from a chart perspective than it is to 85. So those are the best comments I can tell you. If that's the case, then I don't load up long. The first trigger higher, 78.5, 78.4, boom, you get to 81. If you lose last week's lows, you might end up at 73 pretty quickly. And once you get there, it'll be easier to drift lower. I don't know what that is. What is this? Is that a company? Engages in provision of information technology. It's an IT company. Interesting. Wow, pretty big one too. All right, so let's treat it as a chart that I don't know. On a daily basis, you have support. I'm a buyer of this chart from a trading perspective into 132. So the closer it gets to 132, 133, I think it'll find buyers. If it ever takes out, it's too bad that it went to 146. Because had they stopped here one more time, they could have built this higher low, and the trigger would have been right here at 143, 142. Not now, the trigger is at 146 because that's where they fell. So if they do this and they pop here, don't chase it here, buy this. because then they might go to here and pop out. Okay, that's assuming that the support will hold. Hopefully that helps. GM, short. I would not buy calls. I would not hold longs in GM. Just like Ford, I would use the spot to exit out of whatever longs I had. If I was long and struggling in GM, this is a gift for me to get out. At the risk of it taking off, even if it does this and I wasn't long anymore, I'll say, that's okay. I got my money back. You can go wherever you want. That's it. So the idea is that there are a lot of sellers up here. Where, I don't know. I don't want to find out. Look, sell, 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 sell. So that's a lot of transactions. It's a lot of transactions. So getting here is one thing. Cutting through here should be something else. I'm just saying, it's easier to get to 33 than it is to 39 on GM. So do what you need with that statement. All right. Alphabet. So not to wake up the machine again. Look at this. It's exactly what we drew. My scribbles worked. Wow, this is pretty freaking amazing, right? Yeah, well, if this worked, last time it rallied. So let's respect that. Like this. So I'm going to move the green one left. Actually, I'm going to delete it altogether because it's just visual noise. This is enough, that scribble in blue. So respect the dip, but you should also respect the rally potential. That's what they do because it's a great company and it's falling into a buyer. And if the markets hold up, Alphabet would be the one to champion. So if somebody went long Alphabet this week based on that concept for a swing, not a fast trade from point A to point B, good job. And let's see here. Shorter time frame, support into 132, 133. Okay, I'm not gonna make that mistake again. That's the first time, by the way. I type in HAL, and whoever submits this ticker, can you give me the extension of the, find out what it is, like here, Halliburton, what it is, what market it's in, like NYIC, semicolon, HAL, so that we don't have that problem. That would be a giant favor. So I get that when I upload it, it just doesn't give me Hindustan thing. So they are in danger of selling rallies. So you want to watch out what happens this week with 3640. If they don't get to 3660, I worry about it drifting lower a couple of dollars. Nothing more. Short-term comments. HCA. I don't understand the business, so you need to do homework on the healthcare business. If I look left, this is a place where I don't start longs. That's the bad thing. The good thing is if they do take out 280, 250, they can get to 310 maybe. Challenge the highs on the left. Not easy. This is target 1 and 2 have been met. Target 3 is somewhere around 290. I'm eyeballing. But I would be in the buy dip mode. 260. Anything below 260 becomes trading attractive. HPQ. If it gets to 3040, I'm out. I don't think it can take out 31. If it does take out 31, maybe it gets to 33. I guess it's easier for me to, I visualize it at 2850 or 28, easier than 3250. So it's easier to come down to this zone to build a better base than it is to come up here. However, they could be here somewhere, so they might have some more upside. So respect the upside. Make sure you know your time frame. Hershey's in the headlines because chocolate was discovered to be not tasty. No, that wasn't the case. It's some BS logic that if you have a diet pill, companies that sell sugar will suffer. For me, that's more sales. If I love this food and now I can eat it more and get a diet pill and not gain weight, unless it cuts my appetite. But I think it's not an appetite thing. It's a sweet tooth thing. So anyway, I don't think, here's my thing. If you don't see it in the P&L, I don't trade it. So the fact that a Ozempic is popular, I don't think it's the end of HRSY's. And the way the stock traded is like the end of HRSY's. Technically speaking, you have a lot of support now. And I think support starts like $3 below current price. I'm going to put an alert there. And if you take out 196-ish, you can get to 208. But be careful. The media is powerful, and they can convince you a whole bunch of stuff. This is like Chewy. Oh, it's losing sales. Or Disney, it's losing thousands. No, it isn't. It isn't. Look, the P&L will show you if they are. Until you see it in the P&L, don't assume it's going on. Look, on a quarterly basis, they're still growing or choppy. So I'm a long better than a short. In fact, I don't know if they have, I'm going to add it to my watch list. I don't know if they have good options. IFBD, what is this? Infobird. No, it's too small for me. You're going to have to study the company. It's like a $4 million sales. Intel, I know what they do. Okay, so 45 is where they're buying dips. I wouldn't touch Intel above 40, to be honest. I lost faith in the management completely. People in the group that know semiconductors, they tell me they have a new path. Yeah, show me, don't tell me type of a deal. This is the path I still see. Those comments still stand. What if it rallies? It's a fade. There's a lot of sellers up there, and it's probably easier to lose 45 than it is to take out 50. So I think it's a better entry point below 42. IWM, okay, you don't need to submit to IWM. I have a whole video for the indices, so I'll skim over it. They're selling rallies in the IWM, and I make comments about it every morning before the start of the day, and once a week, blanket statement. For now, I'm in the sell the rally mode. I want to see if it gets to 182 or 205. Johnson Controls, strong sellers at 58.20. If you take that out, the moon might be just as easy to lose 55.50. So I'm still somewhat bearish on a lot of these stocks because they look like rising wedges. Ooh, this one has more information. All right, so here's the thing. Not to say anything bad about the company. The P&L looks decent. This was a strong support zone. They battled for it and lost it in a big way, and this is their entry point into it. So support, loss, resistance. That's all there is to it. And if they take this level out, which is 58.30, maybe they get to 61 or 62. And I think there's another band of sellers above here. So exit. I'm looking for exits. I'm not looking for opportunity. If you want opportunity, buy the dip into this cluster of support. That would be the opportunity for Johnson Control. Kellogg's, similar comments to Johnson. It's rallying into prior levels that were great. 60 was a floor, and now it's going to be a problem on the way up. So I'm in the mode of buying the dip. If I'm saying, oh, rats, I missed it, then wait for it to pull back into a decent level. Anything below 54 should be decent. So we'll see. I don't know what happened here in the October time frame last year, but then they recovered it with force. So I would think anything below 54 is a bargain. In fact, 55 or below starts to become interesting. Kroger, good stock to trade. Why is it so volatile when it's a stupid supermarket? I don't get it. Look how volatile it is. Like Pepsi and Coke. They're so stable, and they trade them like they're going out of business every day. They trade more choppy than Tesla. Wow. Okay, so trade the chop. This was an earnings candle. This whole thing was an earnings candle. This whole thing was an earnings candle. So clearly, it's inside of a zone that is toppy at this level. Anything above 47 has been toppy. Anything below 43.50 is low. So trade the range. I get short or get out of longs in the upper ends of that. I get long in the lower ends of that range. Coles, Not for me, but if you're trading the range, this was an exit point. Now the question is, can they hold 24? They do have reason to hold 24. Let's see if they step up to the plate. Here's my take. I think it can do this, lose, and then stabilize, and then recover up to here. That might be a path. This is resistance and a catalyst. You take that out, you go a couple of bucks higher. But I think it's easier to do this and then recover. If you're an investor, that's what I'm looking for. I wouldn't go all in, is what I'm saying. Lily, I wouldn't trade Lily at all, because I'm going to show you this chart. This is more aggressive than Amazon, which is the ultimate growth company, in my opinion. It's probably more aggressive than NVIDIA. Almost as aggressive as NVIDIA. Actually, it's more. Look, NVIDIA has had that huge drawdown that we called after the 21 rally, 66% drop. Lilly has not had that. So that is an aggressive company. If you think you can short it, you better be very strong with your skills. I tried. I was winning, and then one day I wasn't winning. So I said, I'm not trading this stock because I'm not a momentum trader and I don't want to chase it and buy the dip, if anything, and that would be into 588 or lower for trade. I wouldn't short it. Or you can short these rallies and hope for the best. LULU, I think I shorted it last week. I have been wanting to short it, and the way I short is very gently, and I think it can get to 480 or 470. We'll see. Whenever I get 20% out of my position, I'm going to consider closing it because it's not very liquid, LULU. I remember one time I sold puts in IT and Alta, and they were both rallying, and I couldn't close my winnings without giving up a lot of the profits just because the fills weren't happening. I like stabilization around 468 to 456 on a dip. Las Vegas, good rally. Somebody shared a trade with us and we traded it, and then the next day it went red, but it ended up working out. Target 1 was 52, target 2 is like 56. Maybe for me, I would exit my longs the closer it gets to 53. Depends on if you're an investor, you don't need to close anything. You caught a good entry. Manage that the way you usually do. If you're a trader, you got the quick buck. To get here is easy. To get through 53.50, not so easy. Mara, everything I said about coin works here. Watch the shape of this chart. Almost interchangeable, right? Okay, so you have an extreme hard seller at 27 and a very strong buyer at 20. Ping pong between those two. Whichever one breaks first, you're going to go in that direction. So what am I saying? I'm saying in the next 3 weeks, Mara is either at 31, has a chance of being at 31, or 16. So take your pick. I wouldn't hold calls. If you force me to go long, I would sell puts to own shares down in that 16 area. And if you want to have alpha, and then I would buy at the money leaps or diagonals or something. Some fancy trade with options. I would not hold naked calls. Don't sell puts in Mara unless you want to own shares. Mondelez, good P&L. Not a good entry point. If I look left, this zone 74 to 78 has been an exit area, not a starting point. 2 targets have been met and then some, maybe even 3 targets. Let me see. So it's definitely a nope candidate. What is that? Nope. Oh, look at that. I have a circle. That is the target. I have a circle. That probably was the entry point. So target 3 is 79 if you want to hold out for it. Nope is not an obvious point of entry. So wait for the dip into 71 or 70. That would be a better entry point if you're a trader. Medtronics, good P&L, solid P&L on a quarterly basis. Running into some area. Well, they tested open air last week. Can they get to 87? If you're a trader and you're a momentum trader, you want to buy the breakout from last week, you buy the dip into 82 and see if you can get to 87. If you're an investor, I don't know why I would rush into it here. I definitely wouldn't. I like it when it fills the gap, or at least comes to fills the gap. So 77, I'm going to put an alert. MetLife, they recovered this. All this hard work, months and months to come back to the problem area from which they fell. This is an exit point, not an entry point. I don't care what's going on, and the business is not that great. So now they overshot here, and now they're closer to the overshot on top. Not for me. If you didn't have courage to buy the dip, then I would avoid it. Meta. I want to say I saw a bearish pattern on Meta where it's enticing to hold a put in Meta, or put spread, debit put spread, or credit call spread, or both. So if you force me, I would be bearish for the next couple of weeks. And solid P&L, extremely profitable future on the horizon. I shouldn't say this. Extremely bullish concept for the future. It's doing something nobody else is doing yet, and they have a leg up on them, the metaverse. So I'm not shorting it on faith that it's going to fail, but it is technically vulnerable to get to 330. How about that? That's probably the best way of saying it. 332. Okay. Now, if you look at this rise, it's technically vulnerable to get to 210. But that's not going to happen unless there's a market crash. If there's a market crash, this shape, when a stock does this, it just lends itself to these sweeping moves, even if it's bullish and it wants to end up there. You know what I mean? So I wouldn't actively short the business, but I'm saying these sweeping moves are tempting. Look, if you ignore this, here's another way of looking at it. If you ignore this as overshoot, and you ignore this as overshoot, and you go back to the pandemic, before the pandemic, and you take the run rate from before the pandemic, this is this is the mean right here. So if it just reverts to the mean, it looks like a disaster. Okay. MGM, that's a nope candidate. 46 is a trigger to get you to 49, but I think this is not an obvious point of entry. Why? These are daily charts. I have several days of failures, and then a huge day of failure, several more days of failure, and that dates back to February 23. Oh, not to mention these. So this has been a pretty tough spot. Now it's coming to it with a bit of tailwind, but I think this is an exit point more than an entry point. How about buying the dip into 41.50? That would be my method. Triple M, same. I think we went long. I would exit. And if somebody wants to short it based on charts, yes. Let me put it on my shopping list of shorting. I think it's easier for it to be at 102 than it is at 116 or 117. So it's easier to come down to here than it is to come up to here. Marathon. All right, so this is, I don't understand why it's rallying, so be careful shorting it. Buying the dips into 140 with an immediate stop, because if you lose 140, you might end up here. Meanwhile, the bulls are in charge. Last week, they broke out, but they didn't close. So this week, Monday, Tuesday, if they go above 162, they're probably going to end up $10 higher. That's the trading comment. The investment comment, I would buy the dip into this cluster of support and not all in. This one, yikes. Who is this? Medical Properties. Yeah. This I wouldn't touch with a 10-foot pole, as they say. Look at this. I don't understand this. Dividend play, not dividend play. Not for me. So if you are an investor in this one, please figure it out. If you're in it for the dividend, I don't know if it is. For some reason, I'm saying that this might be a dividend play. If you're in it for the dividend, then where's the percent? How Why is it not so easy? Is this 10% dividend? 5? Anyway, just make sure that the dividend is not wiped out with one candles like these. They're selling rallies in this stock. Okay, and the $5 mark I think is insurmountable. I would even say it probably will never cross it again, not to, in the short period of time, in the near future. Look at the volume. On this period of time, the $5 volume was massive, absolutely massive. So it's going to take a lot to come back above it. So I would not double down. I would not buy the dip. And if I'm stuck in it, I would put a maximum amount of pain that gets me out regardless. Moderna, that was a good bounce. I thought it was a buy from a chart perspective. I don't think it has a great future business-wise. I'm not an expert. I spoke to family members who know more about it, and they were optimistic, so I trust their judgment. So do your homework on the fundamentals. Technically, this here is not an entry point. If you want to own it for the longer term, wait for the next dip, and it could be down to 95. That's my opinion. 125 is a hard line to beat, but this is a kind of company that has headlines all the time, so you could get a favorable headline and just burst right through it. The buy the dip mode was fantastic on faith. There was nothing recent that could have told you that, yeah, you can go with full force. But it was a buy the dip moment for sure. Here's, if I didn't have guts to buy the dip down here, and after it rallies 65%, now I am courageous. I think I need to recalibrate my risk appetite. I thought we did marathon. What did we do before? Anyway, let's see here. You don't want to lose 24. If you lose 24, you'll be at 23. MPC, okay. If you lose 23, you're at 21. So lower highs, and they're trying to make a lower low. The bulls are not in charge. For the bulls to be in charge, they need to be above 26. So yeah, you can get from here to 26. Your first problem is 25.3. Your second problem is this mess right here. 26. Microsoft, strong company, huge future. Look at these candles, look at these arrows. I mean, we cannot be more accurate in this. Levels wise, you see this? Okay, this arrow right here, the white arrow, these 3 red lines are the heaviest volumes for the last 5 days. It's 4 red lines actually, which means we nailed levels, right? And now this is the level from the bounce from before. So this company has nothing wrong with it. Look at the solid P&L. It's dream P&L. If you lose those solid levels, you will end up at 340 something. And it won't go there alone, I promise you. And if the markets have a green week or two, it will be at a new all-time high. But it has to deal with a lot of sellers at 374 to 378. So I think natural flow, it should drift lower to just make a better base out of these guys. That's it. The company is perfect. On any dips, I would probably get long for the earnings or something. But if I'm an investor, I'm not touching it up here. Not naked calls for sure. Advisor, what is this? There's a U.S. listed, actively managed to provide cannabis. Oh Lord. Okay, yeah, no. Technically, it's a bit mega breakout. It's probably going to get to 9.6, but as an investment, please study the company. The chart's not going to help you much. The bulls are in charge for the last few weeks, months, I should say, and this could be a breakout that can challenge these tickers, these ticks up here. So solid, Riley, solid. I don't think options liquid enough. I've never heard of it. MU. If it loses 80.5, it's in danger of being at 75 or 73. This company is shrinking in sales. I know nobody believes me when I say it, but they're shrinking in sales. I don't understand the business inside and out. Maybe it's their dominance that allows them to be this bullish, but the company is not very healthy in sales. As a company, this level, that level, you lose this one, I think you're in danger of losing this one. This is good short-term support level. You take that out, you're off to the races. Let me zoom out. Yeah. This was an exit point. If anybody here in this room or watching this video, you're buying, you're going along up here, I'm going to invite you. I'm going to do you this solid favor. Next time, before you take a position, hit me. Say, hey, I'm looking to do this. What do you think? I'll take it with you if I like it. But this was an easy nope. N-O-P-E. Minerals. Yeah, this company makes no money. So you do your homework. From a chart perspective, 42 cents to 43 cents is death. You take it out, you can get to 49. Otherwise, you buy the dip. I don't do penny stocks, so there are channels that do that very well. What is this? Another one? No sales? What is this? Okay, so I'm not going to do that one either. I've got nothing for you. Newmont. $38.50 to $37.50, you have buyers. If they fail, you have better buyers into 34. All this to try to take out 43. You take out 43, you can get there. So I think it's stuck between a hard line of sellers up here and a bunch of buyers at different levels. So this is the one line the bulls need to beat, and they have multiple resting spots below to do it. Nike, if somebody bought it for an investment for the long term, partial position, yeah, that's probably what I would have done. I would not have jumped all in. This dip was okay. It wasn't great. I couldn't find any put premiums to sell. This is a strong base. 88 or below has been pretty strong for a long time, since the pandemic. So it is a good start to an investment position into one of the best marketing companies on the planet. It's not so much the shoe they make, but how well they are marketing it. 108 is a problem. 110 is a problem. 112 is a huge problem. So I wouldn't go all in. If the market's correct, this one could find itself at 96, 94 again. All right, and this is the end of the second video.